Hello everyone. This morning we will continue to analyze how the market is likely to move. Today is July 25th. There is a high probability that BTC will close today's daily candle as another red candle with the downward momentum continuing. With the daily candle closing as a red candle like this, it's highly likely that BTC will continue to go down, and we expect BTC to retest the 63K area and even deeper down to 61,800. So looking at this chart today, what is the best way for us to approach learning from it? First, we will learn how to determine whether today's market trend is suitable for going long or going short. If the trend is short, we will identify exactly at what price we should enter the position. If it is long, then we will discuss at what price we should enter, where we can strategically set our stop loss, and where we can let our profits run. That is the complete content of my market analysis video for today. Of course, this is not investment advice. It's just an analysis for us to learn how to analyze so you can use it for reference, right? And you have to take full responsibility for your own investments. Looking at this, what do we see? Previously, BTC closed a daily candle. Yesterday's daily candle closed with very strong downward momentum. And I mentioned that I expect BTC to rebound up to the wick of this candle. Looking at today's daily candle, specifically yesterday's, it rebounded to the 65,500 to 65,800 zone, just as we expected. With a candle closing like this, there's a very high probability that we'll see BTC continue to go down here, going down to retest the 63,000 zone and even deeper, which is the 62,000 area right here. It is quite possible that after this current candle closes, we'll see another candle moving upward. So based on this morning's data, we can determine that BTC will continue to decline. Before it drops, there will be a rebound up to somewhere around the 64,600 to 65,000 zone. In the 64,600 to 65,000 zone, that's where we will open our position, right? We will look to open a new short position. So let's continue to keep a close eye on USDT-D, which is the dominance and market share of the dollar. And we can see that USDT-D is still continuing in an uptrend. And if today closes with a candle like this, there's a high chance we'll see the wick sweep down here, meaning it'll likely sweep to this previous peak or this candle body. So when USDT-D sweeps down to this wick or this candle body and then continues to rise, and when it sweeps to this wick or this candle body, our BTC should move up somewhere around 64,500 to 65,000. At that point, we will continue to observe the market closely for further signals. If this USDT market share continues to climb higher and test the 8.6% zone, then our BTC will likely pull back down to around 63,000 and 62,000 right here. Looking at this, the momentum is still decreasing, BTC is still dropping, and the USDT market share is still continuing to rise. Taking a look at the charts, our outlook for this morning is that we will plan for a short position. Now, where exactly should we look to enter a short? We will look to enter around the level of 64,600 to 65,000. We expect the next target to be the 63,000 zone, specifically focusing on these wicks here at 63,000 and then further down here near 62,000. That's BTC on the daily candle. Looking at the daily candle, we can see that BTC continues to go down while USDT-D continues to go up. If USDT-D continues to go up, then Bitcoin will have to drop further. Before it goes up again, it's very likely that it will form a wick going down, just like before. If it forms a wick going down, then Bitcoin can move up to a zone around 64,500 to 65,000. So that's the zone where we will open a short position. And let's look at the H4 time frame next. What do we see on the H4 chart? On the H4, we can see that it's still in a structure of higher highs and higher lows. Now let's draw a line across here. Let's draw a line across. This is the area that's considered its support zone. These are the highs, the lows, and the low is right here. So this area is its support zone around 64K, which is the support zone for BTC. And if this specific support level right here is broken, it will experience a sharp drop, falling down to the $63,000 zone and potentially even deeper to 62,000. If it goes further than that, we'll likely see 61,000. Now, let's take a look at USDTD. The market structure of lower highs and lower lows is still developing. Looking at the daily candle, the dominance of the dollar is still continuing to rise. That means we expect that this morning, the dollar dominance could drop to the 8.4% area. Currently, it's at 8.48%, so I expect that this morning it will return to its fairly strong support zone at around 8.4%. After that, it will continue to rise to the 8.6% area. And if it pulls back to this 8.4% area, then our BTC will be somewhere around 64,500 to 65,000. At that point, our BTC will be at the 8.4% area, and if it can't break through this 8.4% and continue up to the 8.6% area, and if it goes up to 8.6%, that's when we will open a short order on BTC. Because in this 8.4% area, our BTC ranges from 64,500 to 65,000. So that's the zone where we will open a short order. But keep in mind, when it reaches the 8.4% area, we need to continue monitoring on the H1 time frame here. Because on the H1 time frame, it's still in a structure of higher highs and higher lows, meaning the uptrend on H1 has already formed with a clear pattern of 2 highs and 2 lows. When a trend formed with 2 clear highs and 2 clear lows, that's an indication of a renewed uptrend. And we can see that if USDTD continues its uptrend, it will only retrace to around this 8.4% level. That means BTC is still in a downtrend with lower highs and lower lows on the H1 time frame, and it will retrace somewhere around this low, which is 64,600. The next low is 65,000. So this morning we can expect BTC to retrace somewhere around here, about 65,000. Because here is its peak, here is its low, and next it will move up to form the next peak here, continuing the structure of lower highs and lower lows. So its next peak should be in this 65,000 zone. And if it reaches this 65,000 zone, we'll consider whether we can short or not. If it forms a reversal candlestick pattern here, like a reversal doji or a bearish candle at this 65,000 zone, then we will open a short position, and at that point, our short entry could be held down to 63,500 or 62,800. Because if USDTD retraces to this area at 8.4%, then it will bounce back up to 8.6%. And at 8.6%, our BTC will have to pull back to this lower zone between $63,500 and $62,500. With this view in mind, this morning we can clearly see that the short trend is still forming, meaning we will look to go short. And when shorting, we will wait for it to form the next peak up here, which means BTC will likely form a peak somewhere around the $65,000 mark. And at $65,000, can we short? We only short when it forms a reversal candlestick pattern and creates the next peak at this spot. This means that USDTD at the 8.4% area must hold strong and form a bullish reversal candlestick pattern to continue rising. This shows that the trend of higher highs and higher lows is still ongoing. But if it drops to this 8.4% level and breaks through, meaning it can't hold, if this support zone can't hold, then it will fall to the 8.3% and 8.2% areas. At that point, we can short at the $65,000 zone. We have to keep waiting to see whether it can hold at the 8.3% or 8.2% area. Right? For example, here, the 8.4% area is a support zone, and next the 8.3% area is the following support zone, and below that is the 8.2% area. See which area it can hold. That means this morning Bitcoin will have a slight rebound. If this dollar market share drops to 8.4%, then Bitcoin will rise to around 64,600 to 65,000, somewhere around 65,000. And if it can hold at this 65,000 area, meaning this dollar market share continues to form a higher high and higher low structure, then it must hold well at this spot. And if a reversal candlestick pattern forms here, it will rise back to 8.6%. And what do we see in the reversal candlestick pattern? Those are pin bar candles, hammer candles, or bullish candles. If there is a reversal candlestick pattern here, we will see it continue to go up. At that point, we will short at the 65,000 area. If it comes down here and can't hold and it breaks through, then even if it drops to 8.3%, we still can't short yet. If it drops to 8.3%, our BTC will go up to around 66,000. So we have to wait and see where it can hold and forms a reversal candlestick pattern. Only then can we short BTC. This morning we saw that the outlook was to short BTC. But we will be watching to short around the 65,000, 66,000, or 67,000 zones. Because if USDTD drops to 84%, then at the 65,000 zone, we will short if it can hold. If it drops to the 8.3% zone, which corresponds to the 66,000 area, we will short if a bullish reversal candlestick pattern continues to form here. Here, this is a reversal candlestick pattern. A pin bar candle with a long wick followed by a bullish candle means the trend will continue to reverse upward. Or if it continues to break through this area, then it will go to 8.2%, and only when it reaches 67,000 can we short. So it depends on how much USDTD drops before it starts to rise again. When it starts to rise again, that's when we can short BTC. Because as of this morning, we can clearly see that the trend is still to short, right? We still have to short. And at what point should we short, right? The timing of our short depends on the growth of USDTD, and only when it reverses its trend and starts heading back up can we short. All right, let's do this quickly. So this morning, my outlook is still to short, and the area where we can short is when BTC, when the area to short is when USDT returns to 8.4%. If it holds and forms a bullish reversal candlestick pattern, then we will short at the 65 zone. But if it drops to 8.3%, meaning it breaks this level and can't hold here, if it breaks down to 8.3%, then we will look to short at 66,000 on the condition that it forms a bullish reversal candlestick pattern like this and continues to go up. If it can't hold and drops to 8.2%, then we will have to look to short in the 67,000 area. All right. So we have these three zones and we need to see which one it will be able to hold. That concludes my analysis for this morning. If you found this helpful, please give me a subscribe and a like. Thank you, everyone.